funky now. Hey, welcome to the closing beat, everybody. Happy Tuesday. How you doing out there? Good. All is good here. Not that you guys probably care, but like all this stuff, if you could see like all over there and stuff, you know, we just kind of wing it, put it all together. Well, the fire marshal stopped by the other day. We got a multi-page report of things that we should fix, and so we've been working on it. So Doug's been in the back there making everything fire legal. But the good news is Louis is staying with us. He gets to stay, no problems there. So we're growing up a little bit here and there. We've got a new guy here, Doug. He is our chief grown-up in the house. And so far, so good. Got the on-air sign going on over there. Ooh, baby. I like it. Hey, we're here to talk about the stock market because that's what we do. We're financial advisors here at Jazz Wealth. You can check us out at jazzwealth.com. And thank you for all of you that have decided to join us there. We are officially open and accepting new clients, helping you get your dough straight. Wine and Wealth this week. We're going to be doing that, of course. We'll probably have Eric come by. He's our new advisor. Not a new advisor, but, you know, he's here new to the visible public anyways. So we'll probably have him help us out with a few things there. Our FinTips videos are on YouTube. They're live. They're free. All we ask is maybe a subscription, you know, hit that little button. Yesterday, I had some fun with some data with you. It's a free video. You go check it out. And today, Eric came with some tips as well. And I'll be back tomorrow, of course. We're going to kind of rotate a little bit, have some fun with that. And yeah, that's pretty much all I got. Let's talk about the markets here. This is going to be kind of a short one because inflation, that's all anybody cares about. So yesterday, the title of this class, this closing beat was, you know, the market's not doing anything until Wednesday, right? And it's kind of like a Fed day. We mentioned that there. If you look on the right-hand side of your screen, you can see the S&P up a quarter point, the Dow down a little bit, the Nasdaq up a little. It's all over the place. Jello on a plate, as they say. And so if we look at the S&P, these last 3 days here, these are the worst 3 days we've seen since COVID. Now, if you remember, February is where we peaked out, started falling. March 23rd is when we actually bottomed. Well, you got to go back to March to find 3 days as horrible as this. And March 2020, by the way, not like this March. So it's really kind of a tough one here, and looks as though we're headed towards a bear market. A bear market would be 20% off of highs, and that's basically the direction we're heading at the moment. The issue here with this bear market is a little bit different than some of the other ones. We don't have a lot of that support. So if this market goes into a bear market, you go, ooh, okay, well, are we going to bounce? Is this going to be good? Is this going to be bad? What? We don't have an accommodating Fed. Usually when we fall into a bear market, the Fed speaks up and says, we'll be more accommodative and we'll, you know, print more money and we'll lower interest rates. That's not happening this time here. You'd also have falling energy prices. That tends to stabilize a bear market. I don't know if you've ever studied that, but we don't have that either. We have high energy prices. You typically have periods of lower inflation or declining inflation. Nope. Well, as of now, we don't have that, so that's a little bit tough to come up with that one there. We got rising interest rates, the Fed coming after us here, supply chain issues, wars going on, oil, which falls into the energy camp. And so this is a lot different. And people say to me all the time, you look at the data and stuff, but isn't this time different? And that's the concept. But yeah, it is a little bit different than the last couple bear markets. And that makes it a little bit tougher. So we're going to be like right here watching all of this to see how the Fed responds, because they've already said if there's some collateral damage, that's okay. And they were talking about the stock market. Anyway, so that's a tough one there. It means that now is still not the time to be diving into the stock market. It's time to be scaling in, right? Find your moments. Find the things that you like. Get things rebuilt again there. The other thing that's interesting about this, I'll share some data with you here. So the other thing that's interesting is the S&P so far this year, if we count yesterday, has had 15 days of plus or minus 2% days, meaning, you know, we finished the day up 2%, down 2%, or something outside of that range. And that's actually kind of odd. It always sticks in my head. I always remember this stat. But if you go back to when the S&P first came out, 1928, brand new, here we go. Here's the index here. 8. We find that there's an average of 8 days a year where we have a plus or minus 2% day. So last year, we kind of get sucked into this whole quiet market. Nothing's really going on. This year, we have extremes. So if you're new to the market, investing, trading, whatever you're doing, this is not normal so much. Now, the shorter time periods that you look back, let me see if I can share this here with you. There we go. If we look back 20 years, right? Just basically 20 years, I'm looking at all the days that were plus or minus 2%. And so we've got 15 right now. Here's 2022. You can see that we had 7 in 2021. 2020 was scary because of COVID there. We had 44. You work your way back. It's not that normal to see 15 days that are so far that are plus or minus 2%. And it's not even halfway through the year, right? That's even more interesting. So that's really tough. Now, over the last 20 years, there have been more. So there's a key thing that people say. Over the last 20 years, there's been more wide-range days. And over the last 20 years, pullbacks have become shorter. They haven't lasted as long there. So kind of an interesting thing to share. I just thought I'd put it up there for you. It wasn't that hard to put together. 2004, 5, and 6, we had 0 2% days. You believe that? Those are quiet years. Remember, last year was real quiet, 7 days. Now you know why. There were 7 days that were 2% or more to the upside or downside. Here's the other problem I have. If we look at the S&P, well, what did it do today? We just basically fell a little bit. You look off to the right, you see, okay, we gained about a quarter point. Well, yesterday we had over a 3% loss on the S&P. Whenever the S&P loses about 3% or more in one day, the next day is actually most of the time positive by a 0.5%. It's 0.52 if you're tracking, but let's call it a 0.5%. What did we do today? We didn't quite get there. We tried at one point. It was looking pretty good, and then it just faded away. Again, it's because the inflation numbers and everything that are coming out. So we will be following along, seeing what we've got. Now, it wasn't for lack of the big guys trying today. Apple did well as far as finishing a little bit stronger. Microsoft finished up about 2%. You could even go down to some of the tech names that have struggled, like Adobe. That one finished up on the day. Broadcom and semiconductors did well. NVIDIA tends to be one you include in the market mover stocks there. Alphabet also finished the day positive there. Facebook, the money went towards those names. Amazon, not so much. You know, this has been quite an aggressive drop here. Tesla, it went towards the popular names. When you branch out and you go, Illinois Toolworks. Nope, Illinois Toolworks was down today. Think of one. TJ Maxx. Oh, no, it was down today. So lesser known names just didn't get the attention. It wasn't a broad sell-off from highs of the day. It was just people scattered all over the place in the market. Capital One, down on the day, right? But if you go back to, how about Salesforce? Oh, big name. That one was up 2%, right? So that was the vibe of the market. You could really see that if you use... Maybe you use like a heat map or something to take a look. I don't know what you're doing there. Other than that, your consumer staples got a little bit weak today. Altria fell. Philip Morris a little bit lower. That Altria was earnings related. Target now lower on the day. General Mills, which just hit new highs yesterday, just ever so slightly, and did today, but it finished lower on the day. We'll cover that. Kellogg, another one, very extended there, did the same thing. So that's what you've got going on. Kimberly-Clark, same thing. Energy was strong on the day, or energy stocks mostly strong. Slight recovery from yesterday. Remember, they took a beating yesterday. Chevron, a little bit of a gain on the day, and that's pretty much it. If you look at the Nasdaq today, well, let's look back here. 1, 2, 3. How much of a decline is that? Not counting today. That's 10%. 10% in 3 days. That's not normal. So again, just trying to illustrate some of the volatility there. You could actually use our research tool, jazzwealth.com/research, and you could see when the Nasdaq falls 10% in 3 days, what tends to happen there? I'll give you a hint. More volatility tends to continue after that, but I just thought about that. Now, you could actually use that tool to find, you could use like the Qs or something, or any NASDAQ ETF you want to look up. Just find one that's been around for a while. All right, what else can we do here? Oh, sector-wise. Let's take a look down the old sector lane here. Communication services, currently in a downtrend. Consumer discretionary, currently in a downtrend. Financials, in a downtrend, getting extended there. Industrials, in a downtrend and getting extended. Tech, no surprise, in a downtrend there. And the S&P is officially in a downtrend as well. Now, of those that are in a downtrend, where's the interest? consumer discretionary because it's extended. If you're looking in the consumer discretionary space, I wrote down a few stocks here for you. The most oversold stocks at the moment, Under Armour. That's the earnings move there that caused that to come up. MGM, very extended in the short term. And from yesterday, EXPE. Those are the most oversold stocks in the consumer discretionary space if you're interested in, messing with that. We could do any sector if you want, but if you look at financials, of course, they're in a downtrend. Current yield on financials is getting better, right? About 2.16%. Most oversold stocks in the financials category here, sector, would be CBOE and S&P Global, right? Yeah, there it is. Right? So off the chart, you can't even see it on the freaking thing there. Industrials are a little less popular, so I do like to point these out. Johnson Controls is the most oversold in the industrials. Rockwell Collins is the other. Pretty much everything looks like this right now, but you could see it. And Transdigm, also extended, but this is a wild one. See the chart? So if you're looking at that, look at how wild day-to-day action is. Traders don't like to look at these here because look at that one versus Rockwell Collins. Oh, okay. A little more true, a little bit more consistent on a day-to-day basis. But go over here if you want. Oh, I'm sorry. You look at that one, you go, ooh, that's a wild, hot mess. Why would I want to mess with that? And it's more expensive, so that one's moving dollars there. Anyways, what else do we have? Oh, in the S&P. What are the most oversold stocks in the S&P right now? Dish Networks. Under Armour, of course. I could just go back to that one there, top of my head. And Illumina. It is. Yep. So still the oversold there. Most overbought stocks in the S&P are going to be Campbell Soup. That one already started working on its pullback today. Newell, which also started making its pullback as well. So that one doesn't really count. And Kellogg's. There you go. Kellogg's obviously very oversold or overbought to the upside there. In terms of dividend yield, you're going to find that energy pays the highest dividend yield. It's currently at 3.25%. Not too far behind that's going to be real estate, which is also extended, paying 3%. And if you're curious, the most extended stock there, Avalon Bay. So if you're looking to pick stuff off, Avalon Bay. You got Mid-America also starting to work on it as well. Maybe UDR. Yeah. Oh my gosh. Yeah. So real estate, paying you the 3%, but making you work for it. Utilities are almost there, almost paying 3% if you're looking for that dividend yield. It's a small mover there, and AES, I believe, is the most oversold at the moment. Utilities tend to be a little bit slower, so not a big deal there. All right, moving on. New highs and lows. Well, there were only two. There was three by the end of the day, but there's only two new highs that finished up here. That was Kellogg and General Mills. They did all reverse. Not that it was a big list, but they did all reverse. There was 109 new lows. Every single sector was on the new lows list besides energy there. Out of the 109 names, 85 of them, not percent, 85 of them were already down double digits before making the new low. So it gives you an idea of the pain out there. They were already down 10% or more, but they made new lows yet again today. They're still hitting new lows. Take-Two is going to be one of them there. That's turning into a waterfall drop, but so difficult to pick on these right now. Caesars, if you're into the gaming type play there, which I'll cover another gaming stock in a second. Boeing also made new lows, rolling over. That one's looking rough, huh? Vornado Real Estate, which has been weak. It's just getting weaker and weaker. Not really much to say there. And Fox, we already talked about that. Just a couple to point out that if you're going to look at the new lows list, this is a really tough time to assume that right now is when Fox starts to bounce. But, man, if you love the counter trend stuff, you've got watch lists for days, right? All right, stocks in the news here. Amarak. I don't know if you've ever heard of them, but you've probably seen their trucks. Down here, they're more popular with the uniforms, going to all the senior living centers. So they're popular with the uniforms for like healthcare and restaurants, things like that. But they're also into food. I think that's one of their bigger portions of revenue there. It's a wild stock. But the company is just a traditional, like low margin, high volume type of business. They know their operations. They just do this stuff day in and day out. Well, they are going to separate into two different companies. They're having a problem where people recognize them for uniforms sometimes. They don't recognize them for food. It seems weird. It's an imaging issue, so they're going to split those two apart there. They were in the news. International gaming tech. If you like, do you do the scratch off tickets or play the lottery, slot machines and stuff? That's these guys. That's what they do. Anyway, so they were in the news because of earnings there, and it was good. Nothing really bad to say. They finished up today 10%. I mean, guidance was as expected, earnings better than expected, overall revenue's good. We're out there gambling again, guys. I guess that's what they were doing. A couple other names here. Maybe don't get a lot of attention. Trex. Just think decking. Really popular down here, but Trex decking is that sort of specialty deck. Anything deck posts, lights, outdoor decking, you name it, docks. That'd be Trex here. And they came out with earnings as well. Everything was pretty good there. Raised their guidance going forward for the next quarter coming up. Nothing for the rest of the year. That was interesting. But that's what they came out with there. I just have fun reading through some of these things. Simon Property, I read through the whole transcript and their report there. It's just neat to hear about various products. This is the kind of stuff I like to look at. So Simon's a different company. I've covered this before. They're the behemoth in the sort of retail leasing space there. I like to hear about the different things they're working on. There's a place in Atlanta called Phipps Plaza. So that's coming along. That should be open by the end of the next year. Designer outlets in France. It's a cool thing they're putting together. That should be open by the end of 2023. They don't own it directly. I learned that through the transcripts. They own about 75% of it there. Anyway, some stats there with Simon Property. 93.3% occupancy, which is good for them. That's actually a record there. It's not a record, it's a tick higher. So that was pretty good. The stock finished up 0.75% on the day. They have approved the most amount of new tenants since 2016. That's the kind of cool stuff you get from that. You don't see it in the headlines there, but meaning people applied to be a tenant in their mall, strip center, or whatever they're working on, and they have approved the most amount of them since 2016, meaning people are coming back to the retail world wanting to do their thing. Now, international is where all the action was, but the demand is here in the U.S. there. Base rent, I thought this was really cool. I wrote it down somewhere. Base rent per square foot, $54.14. That's a lot. Like, good for them. Ours here was 15 and change. And everybody was like, why are you moving, Dustin? I'm like, I always do things opposite of everybody else. And so during COVID, nobody wanted to have office space. I'm like, let's go shopping. Let's find a new office space. We were at $15. I don't know what it is now around here, but very cool. Also, if you're looking tenant terminations, that would be where people went out of business or they decided to leave Simon Property, go build their own building or do whatever. That was at a 5-year low. All right, so moving in the right direction there. Good news. I mean, maybe this now can find a way to come out of this downtrend here. Not so good news for SoFi, right? It was worse. I think it was halted a couple times too, but they earnings, somebody sent the earnings out early, or at least that's what they said. Stock was down 12% there. They put their earnings out early and they lost money. I mean, I don't know. It wasn't going to be good either way, but it was supposed to come out here after hours and everybody found out middle of the day. Whoops, they lost some money there. Well, I think that's tough. They're going to be losing money for a while because they're trying to grow. Anyways, earnings-wise, hey, what do we have here? So tomorrow, my favorite ticker symbol is going to be reporting. This is Krispy Kreme. D-Nut is the name. He says maturely. What else do we have? Oh, Wendy's. Do you like your hamburgers there? Wendy's to report tomorrow. You got Beyond Meats as well. That'll be in the headlines because everybody likes talking about that one. The one that really gets the focus, Disney. Disney hit new 52-week lows today. Has earnings coming out tomorrow. Best of luck to you, Disney. Occidental Petroleum, which finished up higher on the day, they'll have earnings as well. And Rocket, this is Rocket Mortgage, but I believe they're coming. Oh, Bumble. I didn't see that. Yeah? How's Bumble doing? And yeah, that's pretty much it. I'll take your questions if you have any there and try to help where I can. Yeah. Anyways, the Fed's already said they don't plan to raise rates by 0.5%, so we'll increase by 0.5%. Yeah, I don't know. So they said that a 0.5% rate hike is on the table for the next couple meetings. They did not push it. And so far, all the speeches that they're out there giving are not pushing it. They've backed off their tone a little bit. We'll see. Maybe they know what the inflation numbers are going to be ahead of time. I don't know. Yep. SoFi did release their earnings. Yep. What are the odds inflation decreases? Need some help for the market. Well, it's projected that it would. So this is the way you look at it. So we're at 8.5. We're expecting 8.1, right? So it's not that we're guessing that it may be 8.1. We're expecting it. If we don't deliver 8.1 or better, that's not good. So it's kind of an interesting time. It's like earnings, right? A company could have earned 25 cents a share, which was great for them, but Wall Street could have expected 27. So the stock gets crushed. Otherwise, the company could be growing and they're like, yeah, we did good. We just didn't do 27 cents a share. So it's a weird game. That's why you have a hard time trying to guess, like, where's the stock going to go on earnings? Oh, they had good earnings. Everything looks good. They guided forward and everything. Yeah, but not enough. And Wall Street punishes them. Yep. Yeah, they won't be doing the 0.75. I don't see the 3 hike. That'd be a 3 hike, or you'd say 75 basis points. I don't think you're going to see that. What does Dustin think the inflation number will be? I don't have a clue. I think we will see that it's not 8.5 or higher. I just, from what I see out and about on town, around town and everything, I don't think that happens. But will it get down to 8.1 or better? I don't know. A lot of times if you watch the press conference during today, if you watch that, I don't know, Biden talked today, so maybe there wasn't a press conference. But a lot of times they give you that little hint at what they're expecting, or a little smile or something, because they're excited. Yep. Yep. You think the bear markets are shorter now because of internet computers? It could be. It's been a topic of debate. There's a ton of different white papers out there from people studying it, but there's a dramatic difference in time periods that bear markets last. It could be that this last 10 to 15 year stretch that we've been on has been so quick and hyper done that maybe it's just a temporary moment in time where that's happened. But I don't know. You know, I like it. Well, now that depends, right? Are you one that would rather see a slow and steady decline and then we just turn around and keep going? Or do you like this, rip the Band-Aid off, down 10% in 3 days, and oh my gosh, as long as we bounce quickly? I don't know. Long-term, you're long on your positions, but you'd be willing to do a FinTip video on profit taking. I feel like I have. It's all a blur at this point. I know I have done them as a wine and wealth because there was a period of time we were helping everybody with that side of things, the trading plan, the different types of profit taking and things. I know that's in there. Publicly, though, I feel like I did. If you go back to July of 2019, I want to say, it was the July before COVID hit because we went on a cruise. It was like the last time I really went on a long vacation. And I did a video during that. I don't know why that stuck in my head, but I did it then. You like it ripping off, huh? Tear the Band-Aid off. Yeah. Yeah, I'll give you that. That Biden, he not very clear. Sometimes I'm not either, I guess, but that's not what I do for a living. But it is what it is. I don't think I covered oil down today as well. If you're excited about that, yay, another 3.5%. Other than that, I think we're good. Here. Bitcoin refused to bounce today as well. Find that interesting. I find Bitcoin interesting. That's still a thing, but it is a thing. We will see. So we have a setup here in the market that is ripe for a lot of excitement tomorrow. But what's the number, right? This, like today, the rally that happened during the day, it's like, why? What's the point? Why take more risk? But we have that extended market. We have all kinds of stocks that are super extended. We just need a little help to tell us that what the Fed's doing is working. And you've got something there. I wouldn't make a bet based on that. It's too late now anyways, but we'll see. The good news is we're going to find out tomorrow. By the time you wake up or get your coffee or do whatever you do, we'll know the number, and we'll be talking about it. So we'll be here again tomorrow. Thanks for watching. Thanks for checking us out at jazzwealth.com. I really appreciate all the people that are joining us here and wanting to get their dough straight. That's what we like to do. And we'll be talking to you tomorrow. See you.